Today's presentation really would be one taking you through some of the changes that we're seeing in terms of how we provide financing into the industry. And the way I want us to think about this is really looking at transition finance as a strategy, transition finance as an asset. So you've had a lot of geopolitical changes. For example, you're looking at now what's the real value of Ukraine, and that's what we're hearing in terms of, rare earth, which is something no one was actually paying attention to before. And so you're now starting to see this type of assets become strategic for various entities. And that's what we're saying, in terms of transition finance. How do we create renewable assets? How do we create ESG as a new asset for Botswana and use that to attract foreign direct investments into the country? So at Standard Chartered Bank, our sustainable finance offering, it's really aligned to the UN goals. We have a full plethora of products, and some of these products are the normal traditional ones that which involves green loans, sustainable linked loans, but also new and emerging areas of opportunity. And that's one of the things I'm really passionate about and want to talk to you about, especially for carbon credits. So ladies and gentlemen, carbon credits, we've talked about that for a long time, but it's changing. You know that the Article 6 of the Paris Agreement has always been there. But last year, there was a significant change, and we're now seeing consolidation, where you have one entity that would be able to consolidate carbon credits and the recognition of carbon credits. And that's really going to be a new area for companies to be able to generate additional revenue onto their balance sheet. So I think that's one of the key areas as an institution that we're quite excited about. Just to give a little bit of insight into what has been happening on the sustainable finance space globally and for Africa, and then we'll bring that into Botswana. We've seen significant growth on sustainable finance over the past couple of years. Currently, it's about $8.9 trillion globally. As of last year, it was just about $1.4 trillion for Africa. But we started to see a drop, right, in terms of sustainable finance. And that's because you're having a lot more geopolitical tensions now that is sort of impacting that finance. But I think that's an opportunity for us in Africa. That's an opportunity for us in Botswana because we're seeing a lot of these investments now looking for new homes. And how are these investments structured? So we'll look at a couple of case studies on specific areas where we've put this investment to play. I'll give you some examples of new smart partnerships that we've put in place for us to be able to run these investments across Africa. So, you have the Amunet World Power. This is a wind power project in Egypt, 500 megawatts. And this was quite unique because we were able to bring global DFIs like, the IFC and external insurance from Japan to be able to provide long-term financing for Amunet. So this was a $500 million financing project that we helped to structure as global coordinator for this wind project in Egypt. Now, this is another project where we have actually been able to attract international financing to come into a local structure. If you look at this was a 15-year financing facility that we brought into this solar project. So that means that traditionally where you used to have short-term financing, you're now able to bring international financing into the platform and extend that over the life of the project. So quite an interesting project there. And this is how we work with government. So we worked with the Ministry of Finance for Senegal to be able to develop a project. This was one of the first times that you're seeing green financing covered by the African Development Bank. And we structured the solution in such a way that it could have local currency and foreign currency financing under the partial risk guarantee. So for the first time, this partial risk guarantee was covering both onshore and offshore currencies. I think one of the areas that we've been quite proud about is this framework agreement for Ghana. This was the first time globally that is sovereign was putting together a framework under which all their financing would run. And so Ghana put together this innovative framework, one, to identify the KPIs, but also to measure themselves as they are achieving these KPIs. So we put this framework in place for them, and so all the financing that is going into their framework is under this structure. We also work with financial institutions. We worked with Mauritius Commercial Bank in terms of putting together their framework and just helping them in terms of providing that sustainability for financing that they wanted to pull onto their balance sheet. We put together a bit of structures where we look at the use of proceeds, we look at the projects and how they're evaluated, and then we look at how we measure the financing as it goes along. So we worked with Mauritius Commercial Bank on that. We've also worked with other, institutions like ABSA, and I think the good thing about this was the first time a South African bank was actually, raising a green syndicated loan to be able to fund their projects. We also worked with, other banks such as Access Bank, where we were working with them to put in place a framework so that when they go out into the market to go and raise their green bonds, it's actually recognized under this framework. Now, sometimes you're looking at corporates and you're saying, how can a corporate that is already in existence now start to transition? And that's what we did for Safaricom, looking at, how we provide them a sustainability-linked loan. And, we're actually looking at other entities in Botswana now. And, I think we're almost at the final stages of helping some entities to transition into sustainability-linked loans and start to put the money behind some of those KPIs that they've set for themselves. Sonagol was a specific structure where we're helping them in terms of communicating their ESG strategy to the market. So it's not just us coming together to put together for them a framework, but also helping you as corporates in terms of how you communicate to the market. And that's what we did for Sonagol. Let me pivot away from, sustainability and talk a little bit about how we work with companies that are looking into the future to raise significant financing for their projects. And when I mean companies, we work with companies, we work with governments, we also work with other financial institutions, as I have mentioned. So this is, what you probably see Standard Chartered Bank pivoting towards. You would have seen that we're moving towards a corporate and investment banking business, and this really talks to an example of what our investment banking business brings to the table. So we look at, entities, and this is just providing an illustration. We look at entities, we look at your strategy, we look at what your plans are, we look at your dividend policy, and then we look at best-in-class entities globally, and we work with you to develop what we call a gap analysis that speaks to preparing you for raising significant financing, either locally or on the global stage. So we also bring rating agencies into this type of conversations because we already know what they're looking for, and then we work with you to be able to create that last part, which is, the best practice analysis. Then we also help you to define how you're going to get to that stage. And so what you would see as a typical outcome is what we have here, where you would see, what your medium-term requirements are. We'll look at your downside analysis, putting in place a base case scenario. We'll look at optimum liquidity levels. We'll look at dividend policies. We'll look at different type of financing you need to bring onto your balance sheet. And then we'll now provide, a step-by-step guide in terms of how your balance sheet and your capital structure should evolve, and looking at, ultimately the end game. And we look at other things also. We look at, your sustainable structure, how you're going to be positioned for growth, how you can have other streams of revenue. So we've heard from entities and companies here talking about how they've supported social programs, but how can you monetize those social programs? How can you, for example, start to plant more trees and sell the carbon credits into the market so that you can make money from that, ultimately reducing your overall cost of financing? So, ladies and gentlemen, this is just a bit of a view, given the very limited timing we had to engage, but we just wanted to share with you some of the areas that, financing is pivoting, into smart partnerships. Thank you.